Hello and welcome to today's Minds and Money 5 at 5 show, sponsored by Dundee Goodman. For those of you attending 5 at 5 for the first time, the aim is to maintain engagement between investors and miners through a lively interactive format during the current situation. A few admin announcements before we start. The aim is to make it as interactive as possible, so please have your video switched on. To ask a question, you have two options. You'll see at the bottom of the screen there's a chat function where I've already been sort of messaging the whole of the audience. This is where you can go and ask questions, and then myself and the host, Rob Dixon, can go and pick up those questions. You can also go and virtually wave your hand through the participants button, and then we can go to you live, so you can actually ask your question live as well. So you have like a couple of options of actually asking questions live. And again, in towards the end of the week, encourage you to bring along a glass of wine or beer, relax, sit and enjoy. So we've got a packed show today. So without further ado, I'd like to hand you over to today's host, who is Robert Dixon, Managing Director of Dundee Goodman. A warm welcome to you, Robert.
Thank you very much, Andrew. And I'd love to see you actually pour that drink right now. I actually just want to start with a few thank yous. Thank you for everyone at Minds and Money who put together a great show. It's been wonderful so far, so we do appreciate it. On the panel today, we've got Angelos Damaskos, pardon me, a portfolio manager at Sector Asset Management. We've got Gervais Williams, who's the head of equities at Premier Miton Investors. We've got Nana Sangmuah, the CEO of Roscan Gold. We've got Max Sali, the CEO of New Placer Dome. We've got Galen McNamara, CEO of Summa Silver. Paul Wood, the CEO of BTU Metals. And we've got Aneel Waraich, pardon me, Aneel, EVP and Director of Steppe Gold. So this is no accident as to why this panel was being brought together in terms of the CEOs. Some of the companies on the panel, full disclosure, we own at Dundee, but there's several names on this panel in terms of the CEOs that are brand new to, frankly, to even us over the last year. There's new companies on this panel, and I think it's I kind of look at this panel as a bit of a showcase for some new names, but also some names that had what I would consider a reboot in terms of management. I'll use Roscan as an example. They're under new management, new board, and they've had some big success over the last year, just to put some quotations on that. So that's the idea. This is really a showcase panel, and I want this to be punchy. I want this to be engaging. So I've asked each of the CEOs to really only speak like elevator pitch style for 5 minutes or so each, and then what we'll do is we'll open it up to the investors on the panel, including myself, to ask a few questions to kind of keep things moving. As Andrew mentioned, I'm with Dundee Goodman Merchant Partners, and you know, I know I'm speaking for Jonathan Goodman, who is the leader of our firm and everyone in our firm, to say that right now, and if anyone was listening to the preamble with Angelos, like in our careers, I don't think we've ever seen, and I include the 2000s here, an environment more bullish, particularly for precious metals, than right now. And bear in mind, a lot of us have lived through an absolutely brutal bear market in mining for the last 8 or 9 years. And despite the recent run up we've seen in some of the share prices, you know, the GDXJ, GDX, and GDX rather are down sort of 60-65% still from the 2011 peak. So, you know, to say we're bullish is an understatement. We're very, very bullish. And you know, just to for those who don't know Dundee Goodman Merchant Partners, who's sponsoring the event today, you know, we're a marriage of highly skilled technical people with a group of financial / capital markets professionals, married with the capital of Dundee Corporation. And what we're looking to do globally, and as is illustrated on this panel, is to marry our capital and expertise into the treasury of junior companies that we feel have been overlooked, or the market is maybe less aware of, you know, the value of their assets. And in so doing, in a sense, act as a seal of approval, because the market, if they see us on a registry, will know that we have done a lot of due diligence and we've put a lot of skin in the game as well. So before we get on to the CEO presentations, though, I will ask both of the investors on the panel, Angelos Damaskos and Gervais Williams, to quickly introduce themselves. And we're going to start off by asking them to summarize for the viewers their current favorite stock pick. It doesn't have to be someone on the panel, but it can be something that they're passionate about and excited about. Once they've done that, I'll then ask Nana to start, and we'll start the presentations, and we'll go from there. So without further ado, Angelos, Damaskos.
Thank you, Rob. I head sector investment managers, and within the firm, we run a multitude of funds. And among that family, we also run some very specialized strategies focusing on precious metals. The best known is our junior gold fund, which, as the name suggests, focuses in junior gold and silver mining equities. It is a long-only strategy. It is effectively a sector allocation tool for investors who wish to allocate to the smaller cap segment of the mining sector. It is open-ended with daily trading, so it has the liquidity to add to portfolios readily. We have been running this strategy for over 10 years now, but we have been operating in the gold space for over 15 years in both the private and public equities segments. So we have considerable experience to deploy in selecting stock picks.
Great. I'm a fund manager at Premier Miton. I run about $2 billion, perhaps a bit more. And I tend to come in and out. So I'm not a permanent mining investor, but when I am a mining investor, I'm quite big, and we're very big at the moment. I share Robert's upside. I'm tremendously excited about the upside in the sector. And I'm also interested just by how scarred quite a lot of my fund management colleagues are around London. So there's a lot of share prices in London which are completely wrong. And we're in a period where we're getting into dividend cuts, and there's some really big challenges. I'm not very bullish about economic growth going forward. I am surely bullish about how much cash the central banks and the government's going to throw at it. They've still got about $1.5 trillion waiting in the Treasury General account in the US to put back into markets. So I think markets continue to melt up. An example of a company which I quite like, it's just a company which has been around forever. It's got a lot of scar tissue itself, a company called Kenmare. It's involved in ilmenite particularly, which is used to tame dioxide whitening agent. And it's spent probably 15 years and about $1.5 billion trying to get to where it is. It's now in production. It's been in production for a while, but it's generating cash. And the cash payback's fantastic. I mean, we're looking at probably free cash flow on the current ilmenite price of 40% for the next 2 years. The thing is ungeared. It's on market cap of about $270 million. As I say, they put in about 1.5 billion. So I expect this thing. The worst thing for me on this one is it's going to get taken out at 50% premium. I would be absolutely gutted. So there's plenty of upside. So I think there's a lot out there. I think the fund management sector, particularly the generalist fund management sector, is vastly underweight and needs to get a lot of these stocks, particularly some of the precious metals, others as well. And I think there's tremendous upside over time. There is much upside in a lot of other more mainstream stocks after the market melting.
I beg your pardon, Rob. I'm sorry, I missed to discuss my top stock pick as you requested. This is entirely coincidental, but in fact it is Roscan. It is one of the companies that is on the panel today, and it is one of the largest holdings in our fund. Not because we went overweight on it from the beginning, but because it outperformed everything else. So it's a company that we have followed now for over 2 years from its very early development. When Greg Eisenhower identified those very prospective grounds. It has become a 10-bagger for us over the last 2 years. So we are very excited and very positive about the development of the company, which started from very early identification of artisanal workings and some termite sort of assays of gold, and it has progressed to now a significant team with a lot of geological expertise, a lot of drilling expertise that are defining a much larger resource and a very prospective area which could become a major mine in Africa.
Thank you very much. Well, I mean, I definitely share your views on that, and one of the reasons that that Roscan is indeed on the panel. I did have a couple of sort of audience questions that I wanted to pose to the to the investors on the call, and one was, what's been the impact of the pandemic, the current pandemic we have, on the interest to put money into gold projects? And I wanted to differentiate gold projects from producing companies already or royalty companies. Do you think there's been any, I guess, reticence from the investment community to put money into projects as opposed to buying the existing producers, is the question.
I mean, perhaps if I start, I'm more than willing than most other investors to invest in some small caps and some companies which are very small caps in many cases. And I think there's really a real recovery. When you look at this year to date, about 78% of the cash which has been raised in London has been raised for small, well, for AIM-listed companies. About 3.7 trillion, I think, last time I looked at it, 3.7 billion. So substantial amounts of money, and some of that is going into gold companies. And that's not just, you know, existing production, but coming into production and that kind of thing. So I think most fund managers are vastly underweight. London particularly doesn't have a big gold mining company. So if you're going to get money into gold, there is some medium-sized companies, but you have to put it there into small caps. I do expect probably more listings in London of mining companies in the next 6 or weeks or weeks. I think there'll be others coming, to be honest, because I think there's real appetite at the moment.
Well, I think one of my observations of what you've been saying is just in terms of the, you know, the in quotations, the generalist portfolio managers in London, and actually indeed the long-term institutional investors who've invested in the space, the right word is scarred. So as we see the comfort level and the share prices move up, there will be a, you know, there's definitely gonna have to be some catch-up play for sure. So I'm going to stop it there. I'm going to stop.
Sorry, can I just say one thing about the COVID situation?
Yeah.
I agree with the rest and your view that it hasn't really stopped the appetite of investors for mining stocks. So there's considerable capital flowing into mining stocks. What it has caused is the travel restrictions have delayed the development of certain key elements of projects. For example, banks are not able to send staff to conduct due diligence when they're considering financing packages for development stage projects. Consultants cannot get to deposits to collect assays and send them to labs, etc. So there has been a sort of a disruption in the industry like the rest of the world, but it is rather temporary, and I think everybody is now starting to get back to work and things are opening up. Well, hopefully it's an industry that can cope with the pandemic better than the rest of the world economy, particularly as mine sites are remote places. It is much easier to isolate and control employees coming in and out, and also isolate incidents of infection.
Thank you very much. Thank you to Angelos and Gervais. We're going to come back. We're going to have more engagement in terms of discussion. But what I'd like to do at this point is move over to start the presentations. We've already sort of mentioned some of the names already. And without further ado, Nana, could you take it away and try to keep the time limit to about 5 minutes, because we will come back and revisit as it goes through.
Thanks a lot, Rob, and thanks for the interest from the whole panel and others that have joined in to listen. President CEO of Roscan. I've been at the helm for 6 months. I'm very humbled to be heading a team of very accomplished geologists, mine developers, and entrepreneurs, and very excited about the opportunity that we have. Our ground is located in southwest Mali, just about 25 kilometers east of B2 Gold Fekola mine. And for the beginning of the 2020 wet campaign, we've been returning some pretty good intercepts that has got the attention of the market, pointing to something quite sizable. So typical intercepts could be 65 meters at 5.6 grams, and that's been repeated in several cross sections across the 700 meter strike that we have identified in our prime discovery, which is the southern Mankuki. What I would highlight here is we've got the perfect ingredients to put a sizable deposit together. We've got the good grades, the high grades, and the wide widths. And we see the system still open at depth. And we've raised mineralization to just a vertical depth of 165 meters currently. But in the corridor, we've seen some of the deposits being open up to 300 meters. So we're excited about this particular target. But I'll highlight that this represents one of our initial 8 high priority target and was actually the smallest of the lot. And with the acquisition of Comet, we've also added an additional 3 high priority targets. So we're clearly in a very prospective corridor, and we think there's clearly a multi-million ounce potential here. And that has caused us to initially triple our drill campaign from 10,000 meters to 30,000 meters, and now 45,000 meters. So there would be lots of news flow coming through. And we will be drilling through the rainy season, through the summer period. So I would ask investors to stay tuned. But we will, as I would indicate on subsequent slides, we think these targets have the potential to replicate some of the successes our predecessor companies have had in the camp. Talking about the camp, this is a 50 million ounce camp, and it's been sort of explored for just about 3 decades, and it's on its path to rival some of the world mining camps for gold. And we think that as more dollars go into the ground like we're doing, we should see more ounces being picked up. And one thing I'd also highlight is normally with a lot of junior companies, the quality of management is key. After successful discovery and delineation of ounces and engineering studies done, oftentimes if you don't have the requisite skill set to transition to the next level, you just sit and wait and you pick up for cheap. So we fill the slate with very accomplished mining executives that will help guide us to the next level, that points to the ability to maximize value for shareholders if need be. So the addition of Sir Sam Donor to the roster as chairman was really a huge win for us, and he's very involved with the day-to-day running of the company. And I think under his direction, we can continue to add significant value to the land once we achieve the exploration success, which we have already begun to demonstrate. Social corporate responsibility is something we take dearly seriously. We've actually commissioned an ESG compliant review of the company, something that a lot of juniors would do, but we know that we want to take this to the full 9 yards, so we want to get the social license fully baked in. So this sort of blows up the camp in details, and we have a lot of good neighbors, Waraich, Gold, BTU Gold, Endeavor, and the likes. And if you look at the table summary here, the minimum deposit size in this camp is roughly about 2 million, ranging up to 20 million for Luwa 1 Koto complex. And that makes us very confident that we're definitely in the right address. And with exploration success and a lot of good geological thinking being put together with the team we have, I think we should be able to convert some of our targets that I'll be highlighting in the next slide and transform some of these targets into discoveries. So as I highlighted earlier on in our campaign, we started with 8. We acquired the Comet ground. It introduced about 3 more additional high priority targets. And that forms part of a structural corridor, which we think is parallel to the SMC, very less traversed, but guys that have been on it have already shown good success. Sarabaya to the south, Oklo to the northeast, and we have consolidated about 20 kilometers of this structure with about 11 targets to test. So I think the discovery potential is real. The market has appreciated the impact of one discovery, which is Southern Mankuki. And as we continue to do the work and piece it together and pull up a few more, I think we could see solid valuation, re-rating potential in the stock. So I get a question from people whether they've missed the ride and it's too late. And I would say that stay tuned because it could be more exciting going down the road. I'll leave it at that.
Thank you very much, Nana. I'm going to ask Andrew Thake. Andrew, I know we have a lot of questions sort of filtering in, and we obviously can't get through all of them. I have one that I've gotten into me that I'll take, and I guess the one that I wanted to ask you, Nana, is longer term in terms of where you want to take Roscan. What's your broader vision for the company longer term? That's,
well, I think because we're blessed with a great talent pool, we can get a lot aggressive and even try to go the full 9 yards and get a production scenario out of this. But ultimately, we want to maximize value for shareholders. At the stage, we've got about 5 CAs put together with interested parties, some in country, others waiting to enter, take advantage of the prospective district. So the M&A equation is not off the table, but we want to make sure that we definitely exhaust the discovery potential of the ground. That's going to drive significant value. And at that time, if there's a very good offer that shareholders would prefer to take, we'll definitely be going that way. But if we think we can add more value and maximize the potential into a build, we've got a team that can do that as well.
And
Thank you very much.
just got 2 quick questions sent in from the audience. Dana, are you looking to develop a sense of scale? And if not, when do you believe that you may be developing a sense of scale?
A sense of scale in terms of resource size, is that?
Yes, I think, in terms of like resource size and growth of the project.
Well, I think we just started its early days. Quite frankly, we've just been drilling this for 6 months and advancing one target, which happens to be about the smallest of the lot. Our acquisition brought another target, which already has a resource, but it's not been properly drilled out. So what we're doing is to make sure that we get the rigs turning aggressively. We've gone from 2 rigs to 4. And we'll potentially be adding depending on success. But it's fair to say that we shall start putting some numbers around all these targets sometime next year, towards the second half next year. And that's going to be that will be sort of the first cut that's showing scale of what we have on the ground. But before then, clearly there'll be lots of news that would establish things like the strike, the depth, the grades, and that will be enough information for people to put some numbers together.
Thank you very much, Nana. Again, we're going to circle back towards the end if we have time for more questions on all the companies. But without further ado, just to keep things moving, I'd like to introduce the next company, New Placer Dome. The CEO is Max Sali. Max, take it away.
New Placer Dome. This is a bold and cheeky name that we thought of. We were trading as Berry and Mining before, and we had to have a rebranding of the company. We came trading on June 4th after raising $12.35 million. We had a pre-money of $6.3 million going into this raise, so we raised 100% or almost 100% more than our market cap. We are a new junior with 2 very big assets in Nevada, arguably the best place in the world to work, some of the biggest producing assets in the world. And what do we have, and what is our game plan this summer? We have a war chest, and what we did is we took that war chest and we acquired the Kinsley Mountain gold asset from Liberty Gold Corp. This asset is an asset that we purchased or agreed to purchase in December when gold was $1,500. You've seen a significant increase in the price of gold since then. And what we've been able to do is take this asset that was kind of sitting on care and maintenance for a number of years and really bring it back to life. And so the focus of this conversation is going to be why we acquired Kinsley, what we're doing with it, and how quickly we can get things done. Kinsley Mountain was sitting in a company called Pilot Gold. And in 2013-14, Kinsley had some of the highest grade results in Nevada drilled, 29 meters at 22 grams, 20 meters at 21 grams. That asset had a peak market value of $250 million in a bear market in 2014. We purchased that asset for $7.5 million, a mix of cash and stock US. What are we doing with that asset? We have 3 drill rigs that we have secured, 1 for our secondary asset and 2 for Kinsley. We have 2 Super 10s that are showing up on site in 2 weeks. We are doing a 20,000 meter drill program, 15,000 meters of RC, 5,000 meters of core. And what we are going to do is essentially wake up the sleeping giant, and not in a very nice way. We have a drill program. Essentially what happened is, as the market came off in 2015, this asset was put on care and maintenance, but there was a plan put out by Liberty Gold, a 20,000 meter plan of what their full-on exploration plan would be if the money was available at the time. The money is available. We have the cash. We're spending $4 million US starting in 2 weeks on a 3-month drill program with 2 rigs, and we are targeting all new discoveries. We are not targeting the current resource, which, by the way, is 535,000 ounces on roughly 15 to 20% of the property, with a high-grade zone of 302,000 ounces at 6.11 grams. And to put that in comparison, Long Canyon, which is a producing mine owned by Barrick, it's in the Barrick-Newmont JV, 90 kilometers away, is the most profitable mine in the Barrick-Newmont JV at $571 all-in sustaining cost per ounce last quarter. And they got an 8.4 to 1 strip ratio, and they are pulling out 2.09 grams per ton. Kinsley, with the current economics, is about a 10 to 1 strip ratio, but our grade that we're aiming for is 6.1 grams, 3 times that of Long Canyon. And this is an asset that has over 500,000 ounces indicated and inferred on 15 to 20% of the property. So where is the growth? The growth is there's a number of targets on the property that have never been tested. We have some of the best technical team available to us. Last Thursday, we brought on a gentleman that was former senior and chief geologist for the original Placer Dome. He ran the Bald Mountain mine, which is not far from Kinsley, and in his opinion, Kinsley looks very similar to Bald Mountain. What we are trying to do is aggressively find new discoveries in Nevada and do it very, very quickly. I think we've timed the market perfectly. Our stock, when we closed our financing, it was a 22-cent financing with a full 3-year warrant at 30 cents. 3 weeks later, we are now up 100% on the stock, and in 2 weeks, we will start drilling. The other asset we have in our portfolio is called Bolo. Bolo is a Carlin-type asset in the middle of Nevada, nowhere near the Carlin trend, but we hit last summer on a very small drill program some of the highest grade oxide, top 2% in Nevada out of any junior, mid-tier, major the whole year. We hit a new discovery at depth of 12.2 meters at 3.32 grams per ton, and it remained oxide. This year, we have $1 million budget for Bolo, and we're going in there with a 3,500 meter drill program to try and find new discoveries at depth and to show continuity from what we did last summer. So essentially, it's just, as a simple story, we are the new kid on the block. We are cashed up. We have the support of Liberty's technical team to help us out, and we are going in with a $5 million US exploration plan starting now, with results starting in September, and they will go through Christmas time, because we are doing 23,500 meters, which, as far as I have done my due diligence, there is no junior in Nevada doing that, nowhere near that size this summer. And we have the money to do it, and the gold market, I think, is finally going with us. So I think, as an investor, one, it's nice to see everyone is excited again. I'm a young CEO. I've never been so excited in my life. I came in 2010 when the last cycle happened, and like everyone else, I patiently sat there waiting for 9 years for this to happen again. We picked up assets when they were inexpensive. We picked up Bolo in 2018, July, when gold, I think, bottomed at 1188. And we picked up Kinsley in December when gold was bottomed, I think it was about 1480. We have two extremely good assets in the Great Basin where you will not find assets anymore of potentially this size. And here we are, new placer dome, and we're going full bore, and we're starting in 2 weeks. Thank you.
Awesome. Thanks, Max. I love the energy and the passion, and
Thank you.
we definitely share that. Andrew, was there any quick from the audience questions for Max? And if well, I have also a question as well. Maybe
Yeah,
from Angelos and Gervais.
Kind of a bit more of a generic question that's coming. I don't know if it's best for Max or whether it's best for either Angelos or Gervais. Is obviously New Placer Dome is a gold and silver project. I just it was a general question that's been sent in about like thoughts of the price of silver and where the price of silver is heading. I don't know if Max, if you would like to take that, or whether Gervais or Angelos would have any thoughts on that.
We're mainly a gold company. Our Bolo asset does have some very high grade silver and some past producing silver on the property. But we are focused on high grade gold in Nevada. Yeah, if I had just a number to throw out there, and I think this is coming from a number of people I've talked to, I think we're going to see an all-time high in gold in the US dollar at least, because gold's already broken all-time highs in every other currency. And I think this is going to happen before the end of the year, if I was to bullishly say by September. And all bets are off the table once that happens. And, you know, I think people forget how parabolic things went last time. And this is just the beginning. So 2,000 plus, but the sky's the limit.
Thank you.
I tend to agree. I'm tremendously bullish on gold in particular, but I think silver is actually very overlooked. Silver price relative to gold price has been actually lagging gold price rise. I think that's partly due to the fact that it used to be used as an industrial metal, particularly for photography, which is not used any longer. But there's still, I think, as a store of value, I think silver is very, very interesting too. So I'm quite interested in silver stocks. I haven't got any actually. I've only got gold. I haven't found any silver stocks I want to buy yet, but I think silver could be even more upside than gold, to be honest.
I fully agree with you, Gervais. But silver is naturally much more volatile than gold. It has the tendency to outperform and underperform on the way down. But as we are getting in a confirmed bull market for gold, we see the gold-silver ratio still trading at around 100 times, which it hasn't traded in over 50 years. So we briefly, momentarily went way above the 100 times in March with a severe correction in the markets. But the long-term average is about 66 times. That is 66 times the price of silver into an ounce of gold. So we have a long way to catch up, and naturally, as the bull market gets confirmed, silver will outperform gold and will deliver outsized returns to silver mining companies that are mining the metal. So mining companies that are focusing on silver, which are very few and far between, are going to massively outperform everything else. But the word of caution there is that expect a wild ride, because as we have volatility going forward and various gyrations in the market, there will be times when silver will take a big setbacks, as it did in March, when it reached down to almost $10 an ounce from 17 within a matter of a week. So massive volatility, but with careful picking of the market and quality value companies, it should deliver very attractive returns.
Thank you so much. And I'm gonna, just because we're on track on time wise, but I'm gonna move on to Paul Wood, the CEO of BTU Metals, who, if I'm not mistaken, is up next. And again, we're going to carry this conversation forward, but without further ado, Paul Wood, please.
Thanks very much, Rob. It's a pleasure to be here among such great company. Thanks, Mines and Money. Thanks, Dundee, for your support, your ongoing support of BTU Metals, and for the invitation. BTU is a relatively new player in Red Lake, Ontario. Red Lake, people will likely know here, is one of the most productive high-grade gold areas in the world. And it's recently acquired new fame a little bit to the south of where there have been such huge mines already by Great Bear Resources. Great Bear Resources hit first, I think it was August of 2018. their Dixie hinge zone, and their share price was 50 cents, and now they're touching around $20, reaching approximately $1 billion of market cap. We started acquiring land in Red Lake in August of 2018, same time that Great Bear had their initial hit. And since then, we've added 5 more packages to come up with 200 square kilometers that largely surrounds Great Bear Resources. You'll see in the slide that Elaine has up, this trend that goes from the northwest to the southeast all the way down Great Bear's property. That's what they're calling the LP fault. And where those little gold circles are, those are all areas where they've hit gold. And you can see they've come right down to the border of BTU's property. Actually, we've seen their drills turning from our property. So what our thesis is there's a similar type of structure that goes from the southwest to the northeast on the BTU property. This is reflected in the MAG, all the geophysical work. And we've identified gold at surface in the areas on our property, the orange property, along that trend, and starting to build out that whole thesis. So we've had at surface things like 13 grams per ton, multiple ounces of silver. And the team is on the ground right now doing further IP and till sampling in order to identify the next drill targets in order to test that. The ground looks very, very strong. The geophysics is strong, and we're finding evidence of gold throughout on our property. So we think it's more a matter of when, not if, we find something. And so we're very excited. Our team is headed by Bruce Durham. Bruce Durham is our VP Exploration. Bruce was actually on the initial discovery hole at Hemlo and led a lot of the drill programs as those things were drilled out. So it's a privilege to have an industry veteran to be excited, and he's on site right now to run and guide us through this. I'll point out another area to the southeast, the ellipse to the southeast. We're calling it the TNT target because we've actually done some drilling there and identified what seems to be a totally different kind of mineralization. It appears to be a VMS style mineralization, and we've hit as much as a 5.5% copper, 2 grams of gold, and 3 ounces of silver in that. And so the team's on the ground now, and the drill's been up there testing some highly conductive targets. So great jurisdiction, very strong exploration team, supported by great people right up to the board level, and we're actively working now. Elaine, could you pass on to the next slide, please? So this you'll see you'll see on the right, well, first of all, to the bottom left, that's just a grab sample. That was, for example, 7 grams of gold, multiple ounces of silver in that. Interestingly, that there's been gold and silver in both what we're finding along that southwest-northeast gold trend, and also at the what we're calling the TNT target, which is this VMS type system. Now, you'll see, so this diagram to the right shows our trend from the southwest to the northeast and identifies specifically where we've had successful gold sampling. And you can see that just like Great Bear, it has been proving it out by the drill. There's northwest to southeast. We're starting to prove out, at least at surface so far, that our trend with the similar mag is producing gold. So onward, please, to the next slide. So this is the TNT target, which is the VMS type system. And so we hit, I told you, we got the 5.5% copper, 2 grams gold, etc. And this is interpreted geophysics work. And The panels are, the warm colors are highly conductive. The cold colors are less conductive. Where we hit was in the blue, so that was 10 Siemens. Where we're testing now is in the yellow and the red, the highly conductive area, and that's 50 to 100 Siemens. So we're in a hunt for massive sulfides there. So that's really everything for us. We've been, like I said, we started putting the package together in August of 2018. We started drilling in July of 2019. We've already had some very interesting hits, and we're actively working this. We've been recognized by the market as a very interesting story. The TSX Venture named us #1 miner for 2019 and included us in the venture. And we're looking forward to results, near-term catalysts, and stay tuned for some really interesting gold targets, which will be coming out in the next several days. That's
so
it.
results to look forward to very soon here. That's great to hear. Andrew, was there any quick questions from the audience on BTU?
Yeah, there's a question here saying, I hope this is for you, Paul. When will you start drilling the gold in the till area?
Right. So that's those are the targets that are on that southwest to northeast trend. The team is up there right now doing more IP and more till sampling. We want to be careful about where we put the drill, and but we expect some very imminent news on where those targets will be. And you know, I never want to say anything in terms of time frame in these markets because things sometimes take time. But imminently, we're going to have new drill targets in the on the gold area.
Fabulous. Thank you so much, Paul. And obviously, this goes for all the presenting companies. You know, go to their websites, check it out, look at the presentations, and in more depth as you do your work. You know, we were just talking a lot about silver. Actually, funny enough, on the last Q&A part of the last call presentation, rather, and actually right up next is a silver company. But as I mentioned at the very beginning of this panel, one of the things I love about it is it's a new company. So the market really is not familiar at all with Summa Silver, and I will hand it over to Galen to sort of pitch the story. But this is what this panel is all about. It's about really revealing some new and fun and interesting stories for the market to digest. So without further ado, Galen.
Great. Well, thanks a lot, Rob. Firstly, it's great to be here on the panel with 4 other great companies, and it's great to see everyone involved in this. So yeah, like Rob was saying, my name is Galen McNamara. I'm the CEO of a new company called Summa Silver. The symbol is SSVR on the CSE. We're just getting geared up for a drill program on a high-grade silver property in Nevada. That actually, I can say now, drilling just started last night. But rewinding a little bit, we closed a $5 million financing at 25 cents about a month ago, and the stock's been on a tear since then, trading at $1.05 today. So that's really nice to see. So just to introduce the project to get started, it's located in Nevada, central Nevada, halfway between Las Vegas and Reno. We all know Nevada as a prolific gold producing region. Something like 5.6 million ounces of gold comes out of there every year. But what a lot of people don't know is that Nevada was originally known as the Silver State. And that's because of 2 famous Wild West mining districts that go back 100 plus years. One of them is the Comstock district, and that's up by Reno. And the other one is the Tonopah district, and that's where our Hughes property is located. The thing about Nevada, it was formerly known as the Silver State. When you drive into Nevada on the highway, all the road signs say "Welcome to Nevada, the Silver State." So I thought that's an interesting little fact. All right, zooming into the property is called the Hughes property, but the main asset on this property is the historically producing Belmont mine. Now, production in Tonopah goes back about to around 1900. Camp-wide, it produced about 175 million ounces of silver and almost 2 million ounces of gold at grades of about 1,250 grams per ton silver equivalent. So that whole area was a big high-grade past producer. The heyday was between about 1910 and 1930. And when it shut down, things kind of died off there, and the camp really hasn't had a fair shot since then. So along the same lines, we have the eastern part of the historic Tonopah district. The biggest past producer on the property is called the Belmont Mine. It produced 36.7 million ounces of silver and almost 430,000 ounces of gold at a grade of about 1,250 grams per ton silver equivalent. It has been operational since the 1940s, but commercial production there stopped in 1929. Now, the production here is from literally dozens of high-grade veins. The best one being 15 meters wide, again at about 1,250 grams per ton silver equivalent. So that's just a quick history of the best past producer on the property. But what I like to point out here on the right part of this slide is this is just a map showing the veins about 300 meters below surface. So production at this mine didn't stop because they ran out of ore. They stopped for two reasons. The first one being at the end of the 1920s, gold and silver prices collapsed. They really cratered. So that made it tough for the guys who were concentrating back then on the ultra high grade material. Secondly, the veins ran into a fault zone called the Halifax Fault. And I'm just showing that here, that this white dashed line that goes up and down the middle of the map. So the veins ran into that fault, and the old miners more or less lost them on the other side of that. They didn't have the same types of exploration techniques that we might have today. You know, they would just pretty much explore underground, drift along structures, and then when they found veins that blew out or were high enough grade, they would go from there and just mine them. So there's two main questions remaining left in this mine and in this area. In the area of the Belmont mine, where most of the past production was from, how many ounces are left there? And the veins are open both along strike and at depth, number one. Number two, on the east side of the Halifax Fault, really it hasn't been explored almost at all. So the question there is how many ounces are left to discover? So we recently announced a 7,500 meter drill program with 15 holes planned. Happy to announce here that we're drilling now. So this figure here is just an underground view of the entire property. It's a longitudinal section. So on the left side of this, we've got the Belmont mine and the old workings and the veins that we've modeled. This is the one that produced that 37 million ounces of silver and almost 430,000 ounces of gold. There's going to be 7 to 10 holes there, testing some really interesting structural targets, where we think there's very good potential for those veins that are open along strike and down dip to open up into those similar types of widths that the Belmont vein had, which was 15 meters at about 1,250 grams per ton silver equivalent. So that's target area 1. Moving a little bit east from that, we've got an old mine called the Mizpah Extension Mine. Now in that area, there's some historic underground samples that graded up to 7,900 grams per ton silver equivalent, ultra high grade stuff. It was mined on a very small scale because the access to this mine was very, very poor. The shaft that they had to get back to skip their ore up to surface was something like a mile away. So that meant poor access, and because that was so far away, ventilation was really, really bad in that area. So it never got developed. The other interesting thing is that it's never been drilled. So we'll be putting 2 to 3 holes in that area to try to follow up on some of the historic high-grade mineralization. And then finally, if you step out a kilometer further to the east, Echo Bay drilled some holes back in 1989 that had some interesting results. The best one was ET7. It intersected 4 zones of mineralization, one of them being very high grade with 0.9 meters at about 1,600 grams per ton silver equivalent, about 500 meters down. But a lot of the other holes in the area showed some really good smoke in terms of what us geologists call hydrothermal alteration. Some of these holes like ET10 and ET13 were fully altered from top to bottom in a way that's described as being just very, very, very juicy. So that's called the Ruby target area, and we're going to put 2 to 3 holes in there as well. So the thing here is that, for me, it's about when I was looking for projects and I found this one just recently, or 10 months ago or so. It's about a sense of scale. I look at the past production of the Belmont mine coming in at that about 500 meters of length on this figure. But putting that in perspective, you step out a kilometer and a half, 2 kilometers from there, we can still see that the system is very clearly going strongly, in that there's sniffs of mineralization, there's grade alteration. So for me, these areas are just begging to be drilled, and that's what we're going to be doing now.
Okay.
So
We've got a question sent in from the audience.
Sure.
What are the plans for Summa Silver to maybe sort of move up and list on the TSX Futures Exchange?
Yeah, that's something that we're thinking about pretty seriously. So I, you know, not to get too far into the weeds on that and what it takes to do that, but it's something that I think a lot of people are asking for, and we're interested in doing pretty seriously.
Galen, this is more of a fun fact, but what's the origin of the Hughes property? I think it's always an interest.
Right. Yeah, that's a good question, of course. So it's called the Hughes property because Howard Hughes actually formerly owned this property back in the 70s. So he was a guy, I mean, you might, if you haven't heard of him, he was featured in the movie The Aviator where Leo played him. He was I like to say that he was the Elon Musk of his time. So going back to the 70s, and this was around when he had become a recluse and you know, was a little more eccentric just before he passed away. But he bought a lot of mining properties in Nevada with the thought that I think that, you know, mining was going to be something that could be good. He was generally always ahead of his time in whatever he did, but unfortunately he just passed away before he could really, you know, realize his vision.
Thank you for that. Okay, we've got some time. We've got to have enough time for Steppe Gold. So without further ado, Aneel, could you take it away on Steppe Gold, and then at the end we'll get some more cute questions in.
Sure. Awesome. Thanks, Rob, and thanks everyone for attending today. It's great to be back. For those who don't know Steppe Gold, we're listed on the TSX main board. We listed just over 2 years ago on May 22nd, 2018. We listed at $2 when gold was $600 less. We had CapEx risk and permanent risk ahead of us. 2 years later, obviously gold has performed nicely. We have built a mine. Our first mine is a heap leach mine, and we are in production. So I think we're one of the newest producers on the block. Just finished our 3rd month of production, and we'll be able to update the market on how this first quarter of startup and ramp up has gone. It's been very exciting. We've had no issues due to the global pandemic, and having a local workforce serves very well in times like this. When you have a skilled local workforce, you don't have to rely on expats to get into the country to maintain operations. And so I would say in a very tough time at the end of March, we were able to start operations for the first time, and we are now a gold and silver producer. We're aiming to produce 60,000 ounces of gold this year, and at quite a higher margin. Today's pricing, it's over $1,000 margin. So it's a robust starter project that will allow us to fund aggressive exploration and expansion. So we have cash flow, we have some expansion opportunities, and we have some exciting exploration on 2 of our properties. So when we took over this property from Centerra, we did 2 things. We took a phased approach, and instead of building a heap leach, a CIL plant, and flotation circuit all at once, we built a heap leach. That's the top 25 to 40 meters of the 3 core deposits, the oxidized material. Underneath is the sulfides, which is the phase 2 that'll feed into the CIL plant. By doing that, we've established ourselves as a producer, a taxpayer, a royalty payer, an employer in country. And most importantly, it generates a lot of cash flow that now will fund the expansion and the exploration on our properties. So I think this approach has been well received. I guess we're still trading below our $2 listing price 2 years ago, and we're much more valuable today. So what do we have next? Well, we've actually drilled 30,000 meters alongside our build of the heap leach operation in the last 2 years. We've drilled 30,000 meters on the ATO and our new project called the Mungu deposit. So this Mungu discovery, Mungu means silver in Mongolian, was actually discovered by Centerra. There's silver at surface. Our first drill hole on Mungu, 46 meters at 15 grams gold and 82 silver. And so part of this 30,000 meters update that'll come later this summer into a resource and reserve update, we'll put a maiden resource on this Mungu discovery, which is now less than half a kilometer from the ATO deposits, ATO4 deposit actually. So we've had some success on the exploration side that also has not been recognized because we're in mine building mode for the last 18 months, and people don't like to look at anything but the mine build until you bring that online. now that we brought that online, we have cash flow that will fund the further expansion of this asset. And so we've had success on both ATO and Mungu. Like I said, the intercepts of 65 grams, that's 6.5 gold as well on the ATO. This is less than 150 meters deep, this intercept. So there's lots of expansion opportunities on this phase 2. And now that we have the cash this summer, we can actually get back to exploration. We also have a second license in the country, in the southwest of the country. So there's no synergies between the two properties, called the UK license. It's a 14,400 hectare exploration license we jointly acquired with the provincial government of the Bayan Hungar province. So it's the first of its kind joint venture that we formed to acquire this license. And this license is smack in the middle of another company called Erdene Resources that have had lots of success in the last few years on their exploration programs. And they have about 1 million ounces between their two licenses adjoining to ours. So for the first time, we'll actually get to drilling on this property. So nobody has drilled on this license. And we'll start a trenching program next week, which will then direct us on how to start the drilling program, hopefully later this month. So what we have is quite an action-packed summer. We have now production, hopefully commercial production, free cash flow, exploration on 2 properties, and also a revised feasibility study on the expansion of our first property. So that's Steppe Gold in a nutshell. I guess the other thing I want to mention in terms of Mongolia, they just had their election last week. The People's Party won another majority. The People's Party are very supportive of the mining industry, foreign investment. They've been in power the last 4 years, and they're very supportive of Steppe Gold. So we now have 4 years of the same, which means stability. And for us, an aggressive growth plan that we have, where we know we have the support of all stakeholders in country. We have a lot of investors in Mongolia. We have the government officially as an investor earlier this year. So I think we're doing all the right things. And part of that is how we set up the company. We're a Mongolian company listed on the Toronto Stock Exchange. Half our board are Mongolian, our CEO are Mongolian, and as I mentioned, all of our staff in country are Mongolian, and having a skilled local workforce has allowed us to operate in, I guess, tougher times.
Thank you very much for that. I think it was probably more of a question for Gervais and Angelos. But with regards to, I guess, Mongolia and I guess investing in jurisdictions in general, how much do you factor into jurisdictions when you are investing into mining stocks? I mean, maybe to yourself first, Gervais, and then to Angelos, and then allow Aneel to comment.
Yeah, I mean, obviously the whole point about fund management is to have a portfolio of risks, and there are lots of areas which are quite risky, which are quite conventional production mining areas, and so you have a lot of mines in an area which turns out to be risky. Certain parts of Africa, for example, you can actually find that you get caught out. On the other hand, if you go to areas which are quite have extreme risk, you get into some very cheap assets, providing they're not correlated with others. So, for example, a few years ago, I bought a company called Caledonia Mining, which is a gold mining company. Happens to be in Zimbabwe, quoted on the London market actually. I don't think many fund managers would have bought Zimbabwean assets a few years ago. And it wasn't that I felt particularly upbeat about Zimbabwe or about Uncle Bob or whatever, but most particularly that wasn't replicated in any of the other holdings I had. And it was on a PE4, and they were building this great big shaft, 1.2 kilometers into the earth, 8 meters diameter, which is going to double production. And now they're into double production. The share price, I don't know how much it's gone up. And I thought if they were going to nick it, they would have nicked it by now. You know, they wouldn't have left it this long. So they like the cash flow coming from it. So, so I've probably got some, I've got a few stripes from taking a bit of risk, but providing it's not correlated with other risks, I'm willing to take quite a lot of risk actually.
Angelos?
Well, to give you our perspective, being a specialist fund manager in gold stocks, in gold and silver mining stocks, we try to segregate the various risks in our portfolio in terms of mineralogy and geological risk, in terms of management risk, in terms of funding risk and people, as well as political risk. And we have decided from the outset that political risk is something that is not easily quantifiable. And we bear so many other risks. We bear the commodity risk, which effectively everybody in our industry is a price taker of. but most importantly, the geological risk is very important to assess. So we'd rather not overlay our due diligence, our assessment of projects with a lot of political risk, which is unquantifiable. So we generally avoid politically unstable territories and concentrate on the rocks, concentrate on the people, and concentrate on the balance sheet of the company. Now, having said that, I don't believe Mongolia is a particularly risky country or politically unstable. As Aneel pointed out, the government has been in place for many, many years. But it is brushed with the same brush stroke as some other more unstable territories like Russia, the Stans, etc., by investors. And many investors will avoid Mongolia just because it is in Central Asia. So one has to identify the various risks, and as Gervais earlier pointed out, that there are some very, very undervalued opportunities in less stable, less politically stable territories. That can mean that you could reap outsized rewards.
Guys, just keeping a check on time. We got about 8 minutes left in total. So what I'm going to do is, for the next 5 minutes, allow Gervais and Angelos to ask questions of the panelist companies, and then I'll spare a minute at the end to make some closing remarks. But that's how we're going to do it. Fire away, gentlemen. You can ask any of the CEOs any questions you'd like.
I suppose I was most interested in the silver because I haven't got anything in the silver area. And one of the features about Nevada is that it being America, it tends to be quite a high cost area for operations. And I'd be interested to know whether you feel that's the same thing from your point of view.
I guess, yeah, that's an interesting point. It's all relative. You know, I'm used to working in Canada. So in terms of budgeting for exploration programs, which is the same stage that I'm at now, it's actually very similar. So I have a mix of RC and core drilling happening. I'm looking at an all-in cost when you mix the two, when you average the two, of a little under $300 per meter. Compare that to somewhere like I've looked also at things in the high Andes. Drilling costs up there are going to be maybe $800 to $1,000 a meter. So it's all really relative. But yeah, I mean, the U.S. is a first world country, so I think that probably has a lot to do with it as well.
I would like to ask a question to Max Sali of New Cluster Dome, if I may. We are not shareholders in the company, so I was just listening to your presentation. We are obviously in a very attractive jurisdiction in Nevada. It's a big mining district. There are lots of resources there. But you seem to already have a resource that could be drilled and delineated further and understood a little bit better. Why do you focus most of your resources, from what I heard, into exploration, i.e. finding more ounces, and not devote a little bit more capital into defining what you already have and see if this can be brought into production at an earlier stage?
Current resource on a 15 to 20% of Kinsley is 535,000 ounces, and because of the grade, it is actually economical. But increasing the resource from that angle is no fun. You want to have a new discovery. And I think that's what, that's really going to get things fired up for us. And how we feel about that asset is how that asset works is there's a deeper sulfide pod. But because of the grade, it is economical. And what we think is the asset has a string of pearls. And so what the goal would be is to find more of those pods and then combine everything. I think globally on the project, we could potentially grow that asset to 2 to 3 million ounces. And how I look at that is Long Canyon, which is in production from Newmont, when they got bought out, when it was Frontier Gold, and it was bought out by Newmont for 2.3 billion they had 2.2 million ounces. When I compare the original Long Canyon to the original Kinsley, the original Long Canyon in 2009 had an indicated resource of 360,000 ounces. Frontier grew that to indicated and inferred over 2 years to 2.2 million. The original indicated resource on Kinsley is 417,000. It's bigger. And Kinsley had previous production of 140,000 ounces through an ROM heap leach, obviously oxide. And so to me, Kinsley's a bigger asset to start, and it's kind of like a sleeping giant. And so, yes, we can do some more infill drilling and probably increase the resource. But I think for the best value for shareholders is because we have a war chest to go out and drill those meters, let's see if we can hit that kind of grade at the other side of the property. And if we can do that and then slowly connect them, you could see a tremendous growth for this project. Like I said, when Kinsley was in pilot gold and they hit these gold grades, the market cap of that asset was $250 million in a $1,350 gold market when no one cared. If we, at a $45 million valuation today, with the money, can hit those grades on the other side or somewhere new on that project for a new discovery, you could see significant increases like you saw in 2009, 10, 11, when stocks went from 10 cents to 10 bucks. And that is what we're looking to do. Let's have some fun. We have the money. We have the smartest guys working with us. We get to use Liberty's expertise with choosing the drill targets. Let's go. We're in a market where we should just give it what we got. And I think the market is already seeing that with our company.
Final questions, Gervais and Angelos.
I was going to ask Nano a question actually, because I've been quite impressed by the fact you've got the share price moving, and particularly in volume. So private investors have a really big important area aspect here. To get private investors in, buying and selling shares, millions per day, that gives you liquidity to actually get institutions in eventually. Have you done anything particular to get private investors involved?
Our marketing efforts have been very aggressive, and we constantly on the phones, and we're happy to reach out to more private investors. The challenge has been most of the warrants that are coming in have not been readily available. Not all the guys that are bringing the money in are just willing to trade out of it. Some have held on to the positions. So we have a few more coming in, trickling in for that matter, and we continue to reach out to new investors day in, day out. So hopefully we would get some more of those on the register, but we're happy to have attracted some more longer term, larger fund kind of guys, and those are real anchor tenants that we're happy to have on the register, because they would be there for the full 9 years.
That's right. You need the cash in the end, but ultimately you need quite a lot of institutional turnover. Market turnover. Otherwise, the institutions just feel they're locked in; they don't get involved. So you need the private investors as well as the institutions.
That's a good point. Well taken, and we'll be stepping out efforts in that regard as well.
I'll let you guys maybe communicate offline on setting up a follow-up meeting. And by the way, obviously to every CEO on the panel, I'm sure the two investors on board tonight wouldn't hesitate to do a follow-up meeting with you on the stories. I guess, Andrew, we have 1 minute left. I just want to sort of leave this with because we are going to wrap up in 1 minute, an observation from our end at Dundee. In markets past and in cycles past, what typically happens is share prices run up, they do a financing, and then the share price sort of consolidates and dwindles for a while the market digests the financing. What's really been interesting for at least us is been watching the complete opposite. In this early bull cycle, we've seen companies that have been destitute and undercapitalized for a decade finally get financing, and guess what happens? The market goes up, because the people on the sideline who weren't in the deal need to get into the market to bid it up. And a lot of the companies on this panel, if you look at their share prices, they've rallied on the back of doing a financing. And that's because most of them, I can't speak for everybody, but I would say everybody on the panel has enough funds to execute their programs conservatively for at least a year ahead, which means that for an investor to buy into these share prices now, you've got the drill bit coming down the pipe in your favor. And on the back of that, obviously, which, there's risk associated with that, but you also have a rising tide in terms of the gold price. So I think there could be significant upside in all of these names, is my final thought. And with that, I'll hand it back to Andrew.
Well, many thanks once again, Rob. I think it's been a really, really great 5 at 5 session. So thank you to Dundee Goodman for sponsoring it. Thank you to our 5 miners, 5 great mining projects. Please go and check them out. Thank you also to Gervais Williams and also to Angelos. Damaskos for being our 2 guest investors as well. We'll see you all again soon. Hope you all have a good evening. Thank you very much.
Thank you very much. Thank you.
Thank you, everybody. Thank you, panel.
Thank you.